Joining us now to better discuss the performance of assets, Mr. Vijay Valecha, who is the Chief Investment Officer at Century Financial. Welcome again, Mr. Vijay. First of all, allow me to ask you a question about gold. Now, of course, we've had the fluctuations from the highest record dropping dramatically, and many factors have led to a redress of the situation. Are you optimistic about any possibility of reaching an agreement, or that the deal between the US and China will be actually an opportunity to better rises and more rises in the gold prices?
Well, absolutely. The tariff talks between US and China, the tariff talks between US and every other country is leading to more and more central bank gold buying. And I think this is the trend which is going to continue in the future. So, what we are seeing is as the tariff talks are going on, as the conversations are happening more and more, the government buying is just increasing. At the same time, because the governments are buying now, ETFs are readjusting to adjust their portfolios, they're also buying more, which increases a lot of flow in the retail segment as well. Retail segment also is starting to buy more and more gold because the assumption that gold only moves upwards has come and become very, very deep in the market. So yes, what we are seeing is definitely a rally to continue, and we expect more higher highs on gold.
However, what about the Fed decision and Jerome Powell's state of uncertainty, saying he doesn't know when the furlough will end, and the expectations related to the QT and ending, of course, the program of purchasing securities, talking about short-term debts due? Does it mean that we are going to find other assets than gold?
Well, I think the whole market is anticipating a further rate cut this year. But that being said, the Fed was very clear that the path forward is not very clear from their point of view. And I think that's the most important deterrent right now in the markets. We are seeing equities at an all time high. We are seeing not just gold, silver, platinum, palladium, all breaking upwards. But given that scenario, we also see that it is the rate curve going forward that makes all the difference. If we do see a rate cut in December and probably three rate cuts going forward next year, we might see gold rallying much faster. We might see that equities market take a little bit of a dip. But at the same time, if we see that the interest rate cuts will probably stop now and again restart at the second half of next year, then the entire scenario changes not just for equities but for bonds as well as for metals.
Now, let's move forward to oil. How do you read what's happening to oil? An increase, and of course, risks of further sanctions on Russia, and of course, a back to actually reduced prices, despite the fact that data had mentioned that the reserves had actually dropped.
Well, we have seen actually sanctions on Russia coming in for the last 4 years, almost every second month. I don't think that is really impacting oil prices right now. The demand slowdown is very real for oil. That is actually pulling down the prices. At the same time, I think the only factor that can move prices upwards on oil would be if we have any other geopolitical situation, or if we actually see OPEC Plus coming up with some few measures where they'll be curtailing the supply of oil, because the demand does not seem to be increasing even after a China rebound. So that is a major concern going forward for oil.
Thank you very much, Mr. Vijay, for your time. It was a pleasure having you. Thank you.
Thank you so much.